What is going on, investors? Hopefully, guys are doing well out there. Earnings season just wouldn't be the same if we didn't have Tesla, ticker symbol TSLA. The company came out with their Q4 earnings after the bell. And on today's show, we'll definitely get into them. We'll not only talk about this quarter's earnings, but we'll have to talk about really the upcoming year, 2023. Tesla does give you some clear guidance on the number of cars that they're expecting to deliver. So we'll certainly talk about that. They gave some clarity on that on the conference call. We'll recap the conference call. I essentially was live tweeting some of the key events that I heard on the conference call that ended just moments ago. So we'll talk about that. Talk about some of the Elon Musk rumors and news that have been going on with him. We'll talk about some of the expansion plans Tesla reportedly has planned. Tesla is borrowing money, which is very interesting when we go through the balance sheet. Doesn't look like a company that needs to borrow money, so we'll maybe have some explanation of why they're doing that. Roll through all the financials. Look at it primarily on a quarterly basis, but we'll look a little bit at the full year as well. Take a look at the balance sheet, the production numbers. We'll compare that a little bit to some traditional automakers as well. Tesla gets a lot of news for some of the things that they do with their automobiles and some of their days of supply. Compare that. We'll look at some of the ramp up in terms of their different facilities where they're manufacturing these cars. More of the financials, all the key information that you need to understand with that. The conference call is over, and then we'll come over here and look at this from a technical perspective. I am seeing in the after hours Elon Musk saying sweet music to investors as the stock was basically flat, maybe down a little bit on the initial report. But after the conference call, the stock popped up. Now I'm seeing up over 4%. That's after being up just marginally during the regular trade. But this all comes on the heels. Over the last year, stock is down 52%. But year to date, hello, a rally. This thing is up 33%. But still, over the last 6 months, it's just getting back some of those losses that you've seen with Tesla stock. Highly volatile stock, not breaking any news there for anybody. Now, revenues in the fourth quarter came in at $24.3 billion. That's total revenues for Tesla, including all their business lines. That came in at 37.2% year-over-year growth. Their gross margins for the automobiles coming in right about 26%. That obviously comes before you had those price decreases here in the United States, but also they made a point to emphasize on the conference call that they have a backlog of business, and some of that backlog is actually redeeming for cars that are already priced lower than what's printed on their website initially. You also had the incentives that Tesla was offering towards the back half of the year. I believe it was maybe $7,000, maybe as upwards of $10,000 essentially off of your order if you took delivery of it back in December. Now, Wall Street was expecting a number right about where Tesla printed, right about this $24.3 billion. That's what Tesla came in as. Now, Tesla's earnings, by the time we get them here in the fourth quarter, we already know how many cars are delivered. We already know the approximate price that most people pay for these cars. We know the different types of margin structure that the company has. There's not a lot of mystery when it comes to the revenue. So it's all about the future for Tesla. The upcoming quarter, Wall Street's expecting a number close to $24 billion. That would represent about 28% increase. And we've got word on the conference call, which we'll go over here in a second, that this number is likely probably going to be met for the first quarter of 2023. For the rest of the year, you're looking at really solid double-digit growth into the foreseeable future with Tesla. And they seem to emphasize on the conference call, despite all the complaints about Elon Musk tweeting about politics, despite interest rates, despite the macro environment, Tesla is expecting to deliver on that growth rate. Now, Tesla noted on the conference call that January, more Tesla orders were ordered than any time in history, and the company actually had to raise the Model Y price, I believe, by maybe about $500 on their website just in response to that because they were getting so many orders. Now, some of this is twofold. Number one, the company cut the price of the cars. Anytime you cut the price of something that already had a rather significant demand, well, obviously the demand is going to stay there and likely go up. The other thing is you had those vehicle tax credits here in the United States rates go into effect on January 1st. So there were probably some people that were just simply waiting until January to put in their order for a Tesla because they would get some income tax credits for the calendar year 2023. Certainly bodes well for the first quarter, and we'll certainly see if that demand maintains itself over the subsequent year. Now, Musk, king of hyperbole, which is basically the king of exaggeration, he says once full self-driving rolls out, it will be the greatest value add to assets. And what he's talking about with the assets is the existing Tesla cars. So what Elon Musk is saying is the existing car base out there with Tesla, once they roll out full self-driving and you can buy it as a software as a service. Now, currently, I believe you buy this when you order the car for maybe $15,000. The price incrementally goes up, but there is a monthly subscription. So let's say you're going to do a lot of driving. You're going to do a cross-country trip, or you just have a busy work month where you're going to be driving all over the place. Well, you can actually subscribe to this, I think, for $200, $300 a month. And so what he's saying is once they're able to roll this out to all the cars that are already existing out there on the road, it will be one of the greatest value adds. He's talking about 100% to gross margins, probably more in the 90% range when you factor in certain types of costs for those types of things. But it'll be really interesting to see how these full self-driving subscriptions, people adding this later on, once again, it becomes a widely available product. It will be interesting to see what it does to revenues, profits, and margins for Tesla over time. Now, they also gave us an interesting update on the insurance business over at Tesla. They say that it's on a $300 million annual run rate. It's not a large business when you're talking about a company doing the 20 some odd billion dollars in revenue in a quarter selling cars. But look, $300 million, decent, and it is growing 20% per quarter. The CFO noted that it'll be a while before they actually have to break this out. I believe most of that is actually caused by SEC regulations. Most companies would love to hide their different business segments inside of just one lump sum of a revenue. But after a while, a business becomes so material that they are required to break it out. Nike with the Jordan brand, Apple with certain of their products as well. At some point, you have to disclose that to shareholders. Doesn't seem like the insurance business is there yet. But look, $300 million annual run rate growing 20% per quarter. Certainly a large business. We got an update on Cybertruck volume production in 2024. I believe in previous calls that might have been pushed back a little bit. I think they thought maybe towards the end of 2023 you might have actually gotten some volume production. Now there'll be some early production with the Cybertruck, but Elon Musk noted that it'll just essentially, I would assume probably we're talking about hundreds or thousands of Cybertruck. We're not talking about millions of them, and the equipment is currently being installed in Giga, Texas at the current time. Now, Tesla, here's probably the most important update. They gave an update in their 2022 Q4 results, which will go here in a minute, saying that they plan to deliver 1.8 million cars in 2023, but that is actually foreseen and factoring in unforeseen risks, things like a pandemic, earthquakes, tsunamis, any type of labor disruption, all those types of things, maybe even interest rates climbing up a little bit higher than they are now. Musk actually says that 2 million cars are actually possible. That's actually probably more or less the company's goal, but they are telling investors 1.8 million. So they are not seeing at all any type of demand slowdown. In fact, demand is outstripping their ability to deliver their cars even at the current time. Now, Elon Musk denies a report that he's considering to raise $3 billion to pay down Twitter debt. Obviously, he bought Twitter late last year, and the company took on a large amount of debt, and they have a large amount of interest rate tied to that debt. Now, here's the thing, though. Musk did deny the tweet that says Elon Musk explores raising up to $3 billion to pay off Twitter debt. Musk discussed selling up to $3 billion in new Twitter shares, and he says no. I don't think he's discussing doing that. He doesn't want to dilute himself out of his Twitter investment that he just bought. This doesn't imply, though, that he isn't going to come up with $3 billion some other way. And we got a little bit of information on that in the news story saying that Musk is actually in discussion with banks to replace roughly $3 billion of the unsecured debt with an 11.75 interest rate. I've got credit cards. I think that might be lower than that, with margin loans using his Tesla stake as collateral. So that places a high risk, in some cases, high reward on his Tesla stake, as Elon Musk would not want to see his shares of Tesla decline in order to get margin called out of those. And so you better believe if Elon Musk puts more margin loans on his Tesla stake, he will be pumping that stock even more than he is at the current time. Now, Tesla is reporting to plan going to open a $3.5 billion Nevada plant for electric semi-trucks. Now, they're certainly seeing some demand for these. Didn't break it out. We didn't see any type of revenue recognition. I even totaled up the vehicle deliveries when we get over to the financials. I totaled them up and see if there was like a little bit left over, because I would assume that maybe they don't break out the semi here, but they include it in the delivery number. It didn't seem that way. These numbers all add up, and so maybe they're seeing strong enough demand that they're planning a new plant to manufacture those electric semi-trucks. Now, very surprising, after the bell, Tesla filed an 8K, saying they entered in to a $5 billion revolving credit facility with a couple of banks with the option to expand this up to about $7 billion. Now, typically when companies do these types of things, they don't always have an immediate need for these things. When you come down here to the comments, some people are talking about stock buybacks. I don't think you take out a revolving credit facility for a buyback. Typically, this is for some other type of investment, or really just kind of a safety net. One person explained to me that this could potentially be for currency swaps, in the fact that you are selling these cars in China, you're selling these cars in Europe, really across the world, and obviously the dollar strength and the currency differentiating, well, maybe instead of repatriating that money, you actually can draw on a credit facility, and based on the fluctuations in the currency, it actually might be more profitable, or as profitable, just to draw on the credit facility. I'm not a CFO. I'm not an accountant. That's for darn sure, but there's potentially some things involved with that, but it might support that they are investing or ready to invest in a large plant where they'll use or draw on maybe a credit facility just in case. Moving over to the financial results over at Tesla, we had those $24.3 billion. That was 37% growth year over year. In terms of just your automobile revenue, just selling the Model Ys, the Model X's, and all the cars, you had about 21.3. So there's about $3 billion of quarterly revenue from Tesla, from the solar business, the energy storage, the services and parts, and those types of the businesses. Still really strong. Also, the insurance business baked in there as well. Here's what's always been impressive to me with Tesla. Here's your operating expenses for the company over the last quarter. Those are actually down 16%. So you grew your revenues 37%. Your margins even slipped. Your gross margin slipped, but your operating expenses actually dropped 16% year over year. They did tick up quarter over quarter, and the $1.87 billion worth of expenses is the highest since the fourth quarter, but still rather impressive that they are staying in that kind of, we'll call it $1.7 to $1.8 billion on those operating expenses, despite the rapid increases that you see in the revenues. The company stated on their conference call that the proper way, or the way they're trying to manage Tesla, is really through operating margin. If you don't understand what operating margin is, it's essentially your revenues minus your operating expenses. So it's just the margin you make running Tesla. It's before income taxes. It's before any kind of interest on any kind of debt, maybe some other one-time non-business related fees or expenses that you have to pay. It's just making the cars, the solar batteries, all those types of things. The company churned out 16% operating margins last year. It was 14.7, but we are seeing over Q3 and Q1 of last year, it is a little bit of a decline. Certainly quarter over quarter, you went from 17.2 down to 16. Again, largely due to the fact that you had lower profit margins on the cars. We'll get to cash flows and the rest of that stuff here in a moment. moment. I will look at this from the full year perspective as well. The company came in at 51% growth on those automobile revenues from 18.5 up to $71.5 billion. This is why the stock, it sometimes trades at a massive premium. You got these massive growth rates on that revenue side. They did that at the same time. Operating expenses just up 2% year over year from about 7.1 billion last year up to 7.2. I tell you what, it's really impressive when you grow your revenues 51% and your operating expenses grow just 2%. There's a lot of tech companies out there that could take a page out of this company. And here's your operating margin. Again, this is what the financials, the CFO over at Tesla, Elon Musk himself too, is going to judge the company on. I tell you what, just a couple of years ago, the company had negative operating margins. They weren't making money. They started making money in 2020. They made a little bit more in 2021, and they're making even more, up to a 16.8% operating margin. It was 12.1% a year ago. And again, it was negative just a short time ago on this company. When you come over here and look at the vehicle mix, dominated obviously by the lower price cars, the Model 3 and the Model Y, the company announced in their press release that they have an investor day, I believe, coming up in March, where they plan to announce a vehicle. There was an analyst that I believe was trying to be a little bit coy, trying to get Elon Musk to talk about the quote low price, which I guess in these days, maybe under 35. I think when it was originally teased by Tesla, they're looking to manufacture a car under $25,000 and make similar type gross margins that they do on the Model 3 and the Model Y, maybe with a little bit of inflation. Maybe now we're talking about a $30,000 car. Not exactly sure the entry price, but it appears that we probably will get some kind of product announcement from Tesla sometime at Investor Day in just a couple of months from now. And that is something that can absolutely help spur the stock. There's not a lot of companies out there. Apple used to be this way, maybe Amazon to a lesser degree. There's not a lot of companies out there that can announce a product and have it move the stock kind of in advance of that product even available than Tesla these days. And so that's certainly a key event for the company in the upcoming timeframe. When you look to the other parts of the business, the solar deployed and really the storage deployed, out here in Lathrop, California, the company is managing or building these battery packs, and they are used to store solar energy, wind energy, and then deploy that usually to like a grid, but also homeowners can buy smaller units of these types of things. Look at the growth in that business, up 152% year over year. Solar deployed up 18% year over year. Those supercharger stations up 35% year over year. That's definitely keeping a moat around Tesla's business to a certain degree. Here's what an interesting stat that people are going to start pointing to. There's always people talking about when Tesla's inventory starts building up on their website, and for good reason. Look, the company in years past and quarters past had very few vehicle inventory in terms of days of supply. This is a typical auto manufacturer type of metric, days of supply of your inventory. In the past quarters, Tesla had just 4 days, 3 days, 4 days. In Q3, it ticked up to 8 days. In Q4, you now have 13 days of inventory. That means Tesla could not make a car at all, and they would sell through the inventory that they have in about 13 days. And obviously that's elevated from where up 225%, in fact, from where it was a year ago. But the thing you have to factor in is the automobile industry, this is what they are built on. Down at the bottom, the company's running, in my opinion, probably the most efficiently. Kia and Honda have 19 and 17 and a half days of supply each. Subaru, Toyota, Lexus kind of in that mid 20. I would say the average, you have some that are probably a little high here up in the 70s. I would say the average, when you look at like a Mercedes, when you look at Acura, Nissan, even kind of the Fords, they're in that kind of 30-day range where they have basically a month supply of vehicles. So for Tesla to still be at just 13 days of supply, in my opinion, as an investor, while this might get some negative headlines, might scare some people, I actually think this is a positive for the company to build up some supply. So if somebody wants to buy a Tesla, buy a car, it is there and able to deliver in a very short period of time. Moving over to the manufacturing facilities that the company has, Shanghai doesn't believe it's going to expand any time this year, but Berlin and Texas obviously have been in ramp-up phase really over 2022, and the company noted that they are seeing increase production over at here. And the company continues to scale up these production facilities. And I tell you what, in some cases, in some businesses, I might be a little nervous about this. Certainly when Tesla was scaling these things up initially a year, 2 years, 3 years ago, maybe it made you a little bit nervous as an investor. At this point, the company has proven itself time and time again with these facilities. Coming over to the high level view of the revenues, you had $24 billion worth of revenue. Again, about $21 billion of that is for just the straight automobile business. You have your energy generation and storage business that came in at $1.3 billion worth of revenue. More importantly, that business is now profitable, not a huge profit, but energy generation and storage off of $1.3 billion worth of revenue. You had about $1.15 billion worth of cost. And so you've got a business now generating about $100 to $200 million of quarterly run rate. It is up a quarter over quarter. In fact, it's up substantially year over year and quarter over quarter, and the company noted that they are running well below capacity on that energy storage business in particular. The solar business less so. There's more competition there in terms of those battery packs that store that energy and then deploy it later either to homes or large businesses. Well, that business can continue to ramp up. That should be good for the company in the longer term. At the same time, you were seeing this company control their operating expenses. We talked about this at the top. We'll call that $1.9 billion worth of costs, up from the prior period at about $1.7 billion, but lower than a year ago where you're closer to $2.2 billion. The company also talked about how they have over $22 billion sitting on their balance sheet, which we'll see here in a second. The interest income at $157 million just in a quarter on that debt. I tell you what, the longer they keep that there, they'll earn obviously interest off of that. Now, company on their balance sheet recognized $22 billion worth of cash. Nothing really big to see there as the company continues to increase the number of cars in terms of what they have available as supply. Obviously, your inventory number is up exponentially, up to about $12.9 billion in inventory. Last quarter, it was 10.3. Last year, it was 5.7. So they're seeing obviously a rapid increase as you retain that inventory. As you have a larger amount of cars for sale, you'll recognize more on that inventory side, but plenty of cash. The other thing that you see with this company that may get lost a little bit, but also gives you a little bit of clues for future demand for Tesla is you have your customer deposits here. So customer deposits last year, this is when you register to buy a Cybertruck or one of these other cars that they make. It was at $925 million last year. Now it's a shade over $1 billion. And that's relatively flat from where you were a quarter ago. Obviously, those deposits likely get pulled off once the vehicle is delivered. So you're seeing relatively strong demand on those customer deposits. I think if you saw demand fall off a cliff for Tesla, which they indicated was actually the reverse. I mean, the company is actually seeing more demand for their cars than in any time in history for the company in the month of January. So we're not seeing a decline in the customer deposits. The other thing you have here is deferred revenue. This tends to be kind of full self-driving. So they take those large kind of $15,000 a car. I might be mistaken. Maybe it's a little bit higher now for full self-driving. They're able to release this deferred revenue into the company's operating profits after a certain period of time. Once full self-driving becomes widely available, this $1.7 billion, instead of being deferred, will be recognized every year on a quarterly basis. Overall, this is probably the best balance sheet in the entire automobile sector. We look at some of the other automobile makers, and it's no offense to them, but this balance sheet is as good as it gets and certainly could ride through some difficult times, maybe even some difficult years. And we're talking about plural there based on the amount of cash and assets that the company currently has. When you come over here to cash flows, it's not that great, but it appears there's a lot of kind of one-time type of things that are impacting the cash flows. So on net income, you pull that down, $3.7 billion. It's up over a quarter ago. In fact, it's the largest that the company has recognized in the history of the company. But when you come down here to net cash provided by the operating activities, it's actually down to about $3.3 billion. It was $5 billion a quarter ago, and it was $4.6 billion a year ago on considerably less net income and revenues, mostly due to the fact you had these change in operating assets and liabilities, which crop up every couple of quarters for Tesla and impact cash flows. Wouldn't really be overly concerned about that. You also had a large amount of capital expenditures. We're running at kind of a $1.8 billion run rate, but what you also had was purchases of investments that really accelerated over at Tesla in the most recent quarter, the tune of nearly $4.4 billion. That's up considerably over a period of time that we have recognized here. Company doesn't do a whole lot from a financing activity, so you did see some decrease in cash in the most recent quarter to the tune of about $3.2 billion. The last thing that I'll show you is the automotive vehicle gross margins excluding the regulatory credits, which I believe based on the new law will probably come even more significant over the next year or two. And I think it applies to the battery and storage business. You're looking at 24.3%. This is on a quarterly basis. And you do see that is down considerably, a couple points over where we've been in the past. If we want to take a little bit broader view of that, in 2022, you had automobile gross margins coming in at 26.7%, very much in line with where you were in 2021 at 27%. And it's still well above where you were in 18, 19, and 20 for this company. So as long as, look, the gross margins are going to slip a little bit, as long as they're playing this kind of cut the price game to maintain production levels that make sense for this company from an operating perspective. But there's no other car maker that has these types of margins, so they can continue to cut prices over at Tesla. Might not make investors happy, but from a financial perspective, there's not a whole lot to be concerned about. Now I'm seeing in the after hours, stocks up about 5.3%. We did a little bit of a reversal on this stock, just had a massive decline, broke through a very key level of support for the stock that really held for 2 years. It was up here at about $180, fell down to, I wouldn't say necessarily like a logical area of support. I thought we would stop here at 130. That didn't happen. It kept going down, got that back down to about $100 per share, bounced up very nicely. It's had a nice rally. We've seen year to date, stocks up about 30%. Here's the deal though. You are still in this downward channel. You have peaked up above it, depending on how you draw on these lines. I am on a weekly chart here. You can switch this to daily. It's going to point to a similar type of thing. The stock is now trading up here at this purple line, well above the trend. We should meet resistance at this stock, $25, $30 higher at 180. Wouldn't blame anybody that took a shot on this stock when it was much lower down here under $120 to take profits as you rally here. In fact, my advice with Tesla, despite the stellar financials of this company, is this is so, not breaking any news here. It's a wildly volatile stock. It'll go up 60, 70, 100% and then give 60, 70 of it back in a relatively short period of time. If you don't have the stomach for that, this might not be the stock for you. But certainly if you like taking shorter term profits, if you like making money in a short period of time, long or short, this is a dream come true. These types of charts, these types of swings on these types of stocks. And even Elon Musk himself is a dream come true, since he causes the massive fluctuations, sometimes in the stuff he does, sometimes in the stuff he says. I think we're going to come up here and meet resistance maybe right around Investor Day, up here about $180 per share. That'll probably be the area where you get some resistance and the stock pulls back. Really, the pullback, the rally is underway with Tesla. And, it's anybody's guess how long the rally goes. The rally could honestly go all the way back up to the top of a range and still be in a relatively steep downtrend. Going back to 2021, that is possible. We could go back up to about $250 per share and just confirm that the downtrend, the overall downtrend in this stock, is still intact. I don't necessarily think that is possible with Tesla. I guess it is. Probably shouldn't say that, but I think we stall out here at 180, and then it's just a matter. Do you come back down here and retest 100? Do you go back and blow through it, confirming that this downtrend is intact? Or do you stop short of 100, maybe stop at 110, 120, and then you start what is likely perceived as maybe a pivot point or a new uptrend? That's kind of what we're looking for with a lot of stocks. And look, it is possible. You look at like an Nvidia in a massive downtrend and then made a very nice pivot. Hitting resistance likely will pull back. Same thing with Netflix. Okay, massive downtrend on this stock, but then hits a pivot point, breaks out of a technical trend, and then, just has been soaring through different levels of resistance. Same thing with Meta. Major downtrend, kind of a pivot out of it. It's not fully confirmed with Meta. Netflix, Nvidia, likely better stories there. If you're bullish Tesla, that's what you're hoping for. We're in the early stages of that. The momentum is in this name. Shorter term momentum players would likely know what to do when it comes to Tesla. We'll talk about more about these earnings and the fallout of them on our Friday Fang Stock Recap Show, where most of you know we recap all the major news from all the major Fang stocks, including Tesla. There are timestamps in that video if you want to just recap yourself on all the news that happens with Tesla and the technical charts. There are timestamps, and it would take you about 5 to 10 minutes to recap yourself every single week. I will see most of you again on Friday, and we'll also be back again tomorrow with more earnings. Hopefully, you guys have a wonderful day out there. Good luck with your investments.